Good afternoon, ladies and gentlemen, and welcome to the REGENIX Group PLC final results investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Please just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will send you an email to notify you when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and your attention would be greatly appreciated. And I'd now like to hand over to David Koch, CFO, and Daniel Lee, CEO from REGENIX Group. Good afternoon to you both.
Thank you, Mark, and thank you to all the attendees for spending some time with us to give us the opportunity to provide you an update on REGENIX since we just released our 2020 results. We'll spend the next 25 minutes discussing the company, our activities, the results, as well as our plans. We will have time for questions after, but in some, we can also entertain questions during the presentations through the chat room. So with that, I will get started. This is a disclaimer slide, which can be reviewed at your leisure. First, I'd like to, introduce the presenters. I'm Daniel Lee. I'm the Chief Executive Officer. Also presenting today will be David Koch, who's our Chief Financial Officer. First, a little bit of background about myself. I was appointed the Chief Executive Officer for REGENIX in November of 2020. I originally joined the REGENIX organization as the President of U.S. Operations for the Cellrite division here in San Antonio, Texas. I have 30 years of experience in technical as well as in commercial roles, whether in small companies or large companies. These were companies that were focused in medical devices and biologics. One of the small companies was Osteobiologics, which was acquired by Smith & Nephew. Also with organizations that have gone public. RTI Surgical was a company that was spun out of the university and went public. So what interested me and what attracted me to REGENIX is that REGENIX really is a unique opportunity. We have the global opportunity to provide tissue-based grafts using allograft tissue as well as xenograft tissue for the global market, and that is something that most companies do not have, and makes this company very unique in the marketplace. So with that, David.
Thanks, Danny, and thank you to all of you for joining us here today. I'm really excited to join the group at this transformative time in its history. Before I made the decision to join the company, I did an extensive amount of due diligence. I was really impressed with three things. Number one, the strength of the customer relationships that the group has. Customers like Arthrex and our white label customer, they're very discriminating. They don't undertake these partnerships lightly. So it's telling that they would choose to partner with REGENIX. So that was a very strong, third-party independent endorsement to me. Number two, our new product pipeline. Danny will go into some more detail on the new products here in the next few minutes. The Orthopure Xt, for example. I think that will be a game changer in the next 3 to 5 years. And finally, it was a chance to work with Danny. I think he is a perfect commercial leader for this company. It is where we are today. He's got incredible relationships both here in the United States as well as internationally. If there's basically any market you could name, he could pick up the phone and call it a thought leader, a key opinion leader in a clinical marketplace, or the CEO of a company. You know that if you ever tried to walk a trade show with Danny, every booth he knows somebody. In every aisle he knows a doctor. So if I was walking the trade show floor, that's a 30-minute exercise to see the high points. With Danny, it's an all-day affair. So I think we're very lucky to have him leading the company at this time.
Thanks.
I got to talk about my background.
Oh, sorry.
Yeah, sure. By way of background, I started, ran, and sold a medical device company. So I've got a strong history in operations. Along the way, I had the chance to work with Danny as Chief Financial Officer at Orthopure Biologics. And I started my career on Wall Street, first in investment banking at Solomon Brothers, and secondly in corporate finance at GE Capital. So thank you guys. Look forward to talking to you more.
Thanks, David. So over the past several months, we have made a number of management changes as well as board changes. So, and the reason we've done that is that the company has evolved. It started off as an R&D organization, and now we're very commercially focused. And so we're trying to, rationalize the business, the management team, the board, as well as make it more effective. John Glenn, who was one of our board members, was appointed the chairman earlier this year. Dr. Homer Benisicum remains as one of our key clinical advisors. But the two new additions to the board, Brian Phillips as well as Trevor Phillips, provide us, tremendous financial as well as, commercial experience, and will help lead us into the future as we continue our commercial focus for the organization. Okay, now I'd like to just provide a short overview of the company. Tissue REGENIX is a global healthcare organization focused in the area of regenerative medicine. So regenerative medicine is a discipline which seeks to regrow, replace, repair cells, organs, and tissues, utilizing the body's inherent ability to heal itself. Tissue REGENIX has developed tissue-based scaffolds using two primary processing platforms. One of them is called Decel, the other one is called BioRinse. Both of these platforms share the common goal of preserving the inherent biological, biochemical, mechanical properties of the tissue through a gentle processing methodology, but also it enables the tissue to become safe as well as sterile. We have manufacturing facilities, not only in the United States here in San Antonio, but also in Leeds, United Kingdom, as well as in Germany. We have an extensive product pipeline, and it's developed from numerous tissue platforms, which I'll describe in just a few minutes. We also, as David mentioned, have some significant strategic partnerships, but we also have very strong distributor partners in a number of the markets in which we have products. So we certainly feel that the company is well positioned to be a transformation, to transform healthcare through regenerative medicine. Independent market research confirms how large an opportunity that regenerative medicine is and will be. Tissue REGENIX products treat traumatic or degenerative conditions in numerous surgical specialties. Our goal with all of our tissue products is to restore the quality of life in as many patients as we can. And this is especially important as one of the tissues that we use is human allograft tissue. And that tissue comes to us as a gift of tissue donation. So it's very important that we're able to create products that help as many people as possible with the gift of tissue donation. So the organization is focused on the ongoing commercialization of our products, and we will continue to develop products using our technology platforms to address unmet clinical needs. So a little bit about our product portfolio, which I will categorize into three main tissue families. We have bone products. Bone products primarily use our BryoRinse technology platform, and our leading bone product is a product called Consolidate, which is a demineralized bone matrix product. It's distinct in the marketplace for a couple of reasons. One is its ease of use, but more importantly, this is a 100% bone product. Now, there are some other demineralized bone matrix products which use some bone, but they also may use a synthetic carrier, which tends to be an inert carrier. Ideally, you want a product that is, if you're trying to put it into bone, you want it to be all bone. We also, what's unique about this product is that we verify the product for osteoinductivity using two industry accepted tests. We're the only company that tests in both manners. And why is that important? This is a bone product. You want to make sure that it forms bone, whether you're using it in an orthopedic procedure, a spine procedure, a dental procedure. That gives a clinician confidence to use the product. Another tissue platform for us is our soft tissue products, which primarily use our D-cell technology. And D-cell is unique in that it has the ability to remove 99% of the DNA from the tissue. Our leading product in the soft tissue area is a dermis product known as Dermapure. And it's distinguished in the marketplace by its handling capacity, capabilities, but it's also its use is differentiated by its readily accepted, and it's also readily incorporated, whether it's used internally or externally. And this can be in procedures such as wound care and urogynecology, as well as many other surgical procedures. The last tissue platform is our birth tissue products. And our lead product there is an amniotic membrane product, which is processed via a proprietary methodology. Now, this product, the AmnioWorks product, is distinguished in the marketplace by its aesthetics, but more importantly, again, its clinical outcomes when used in procedures such as ophthalmology, as well as other indications. Now, as David mentioned, what's also exciting is our new products. And we introduced two new products in 2020 during COVID. Now, Orthopure Xt is a xenograft, which means it's a non-human tendon graft. This is sourced from porcine tendon. And this is a graft that's designed for use in anterior cruciate ligament reconstruction procedures of the knee. Anterior cruciate ligament, or ACL, procedures are a very challenging surgical indication, especially for the graft. The Orthopure Xt is processed using our D-cell technology, and it currently is the only non-human biologic graft that is indicated for ACL reconstruction. When you ask a clinician, biologic grafts are really the only things that have worked in his hands or her hands for an ACL reconstruction, whether they're using autograft, which is tissue from the patient's own body, or allograft, which is from a cadaver. Any previous attempts to use animal tissue have failed, and synthetic products have a limited lifespan. So this is a very innovative product in the marketplace, and not only does it represent a milestone for tissue REGENIX, but it represents a milestone for the industry as a whole. Also in 2020, we introduced a soft tissue orthopedic product with a top 10 global healthcare company. Though I can't name the company, This development was a 2-year collaborative effort with this organization, and it resulted in a product that has been very favorably received by clinicians. Any clinician who's used the product, 90% of them have said, I plan to use this product again. So we are very excited by these 2 products. We expect their growth to be tremendous as we rebound from COVID in 2021. Obviously, COVID put a little bit of a mute on the growth of these products, but we anticipate that both these products will represent for Tissue Regenix single-digit millions of revenue over the next 3 to 5 years. One of the things that has limited our organization's ability to grow is our capacity, especially in the San Antonio facility, which produces a significant portion of our tissue portfolio. Since I joined the organization in January of 2019, we've really focused on increasing the throughput, the efficiencies, and we've been really, we have done a good job of increasing our capacity. But the fundraise in 2020 enabled us to move forward with our physical expansion plans. And we divided these expansion plans into 2 phases, a phase 1 and a phase 2. The phase 1 will give us more ultra-low temperature storage for our donors. Now, donor tissue is fundamental to our growth, because without this raw material, we can't process more products. So we need as much donor tissue as we can. Another area that we built as part of our expansion plans is our distribution center. Our distribution center now can handle stored more product, as well as more efficiently distribute higher volumes of product. So again, this is especially important as we continue to grow. The last part of phase 1 is the addition of 2 clean rooms in our existing facility, which will provide us approximately 50% more capacity, as well as the flexibility in terms of scheduling how we produce products. So these are 2 additional clean rooms will enable us to have our current facility have up to $30 million of revenue, of capacity. Now, the 2 pictures there on the right show our new freezer room, as well as our new distribution area. Now, a little bit about phase 2 plans, which were to add 10 additional clean rooms. This project is anticipated to cost $3.2 to $3.8 million. Will take about a year, and it potentially adds capacity of about $50 million to our organization. Now, the initiation of this phase 2 project is pending the resumption of demand, and so this as you know, COVID has kind of put that project. COVID has certainly affected the timing of that project. So with the phase 1 and phase 2 completed, the Tissue Regenix organization here in San Antonio will have the capacity to produce up to $80 million of product in the future. So David, I'm going to turn the meeting now over to David, and he'll walk you through our 2020 financial performance.
Sure. Could you index? Here's our P&L for the year. We were very pleased to bring in revenues down just 1.6% from prior year. Actually, exactly flat when you look at on a constant currency basis. That's, we think, extremely excellent performance. Many of our competitors that we track in the marketplace saw double-digit or higher sales decline. So to bring in the sales number down 1.6% in a pandemic, we were very pleased with that. At the gross margin line, we held our gross margins flat, 46%. You can see the significant progress we made in addressing our overheads. When you look at the administrative expenses line, that's down 3.1 million pounds for the year. Certainly some of those savings were related to the travel restrictions that we faced in the year, but the majority of those savings will endure. I want to draw your attention within the exceptional items. We recorded in the period a 6.1 million pound impairment charge against the goodwill account relating to the Cellrite acquisition. This is a non-cash charge. Because of the pandemic, our auditors pressed us to take a more conservative view of that goodwill, and so we booked that non-cash charge in 2020. To emphasize, has no effect on the ongoing revenue-generating business, revenue-generating potential for the Cellrite business, or no effect on the operations. Finally, you'll note in grant income, we recorded £855,000 excuse me, grant income related to the US and UK government pandemic relief schemes. Next slide. Looking at the balance sheet, obviously the most important figure for all of us is cash. We finished the period with 9.6 million pounds in cash. We believe that the placing that took place in June of 2020 should fund the company through to profitability. Other items of note on the balance sheet, for the first time, international accounting standards forced us to record a right of use asset that represents the leasehold here in San Antonio, as well as our leasehold in Leeds. With respect to inventory, we took advantage of the pause button kind of imposed upon our business by the pandemic to add to our stock levels of our long-lived inventory. This will really position the group to be in a good position as we start to roll out into the backlog of elective surgeries that we see, to have the stock on hand. On the liability side, our loan is from MidCap. As part of the placing, we renegotiated the repayment terms with the lender, so now they begin in the second half of 2023. We have a revenue covenant associated with that financing. We've comfortably met that revenue covenant for 2020, and we expect the same for 2021. One of the first calls I made when I joined the group was to MidCap, just to take their pulse, their important source of financing. They're supportive of the credit and could be a future source of financing for the group in the future.
So just a little bit about Tissue Regenix response during COVID and our post-COVID plans. Recently, I had the opportunity to read an article from McKinsey that talked about how does a company plan to recover rapidly from COVID. And they talked about really three areas that companies need to focus on: navigating the now, planning for recovery, as well as leading in the new normal. And it was very interesting how it aligned with what we put in place here at Tissue Regenix. Navigating the now was certainly where we implemented measures to not only keep our employees safe, but also to keep our operations running. This enabled us, of course, to continue to service our customers, but it also allowed us to continue to produce product. If we did run into any COVID-related issues, whether it was personal protective equipment or donors, we found we were resourceful enough to certainly find find new sources. Planning for recovery. So during COVID, we certainly continued to implement efficiencies, improve our operations, because we knew COVID would eventually be over. As David's already mentioned, we built inventories. So, since we knew that potentially there's going to be a rapid recovery of business as elective surgeries came back online. And then leading in the new normal. One of the things we didn't stop was continuing to develop our capacity. We went forward with our plans for phase 1. So this will allow us to grow, allow us to produce higher volumes of product, and will give us the ability to not only produce additional products for existing customers, but new customers, whether in the United States or outside the United States. So post-COVID, overall, as David has mentioned, I think we held up well in 2020 relative to our peers. Our financial performance in 2020 was indicative of the continued demand for our products. Also, one of the things that we noted was, since we are diversified, our diversification enabled us to have revenue sources from various disciplines. So it was a little bit of a, COVID was smoother for the overall organization. Now, we certainly think that vaccines are the way to resolve COVID. Here in the United States, it is anticipated that by July of this year, 70% of the population will be vaccinated. Though we can't predict how quickly the return to normal will take, whether in the United States. Obviously, outside the United States, COVID still, in the United States and the UK, COVID, we seem to be headed toward recovery, but obviously in a lot of other international markets, COVID is peaking. So we just can't predict necessarily how quickly we'll recover, but we're very confident and positive on the resumption of demand in the second half of 2021, since the reality is that the need for surgery does not go away. People are still going to come back and have their elective surgeries. COVID, as David mentioned, was a pause button. It was a pause button for a lot of things, but one of the effects was a pause button for our growth. But we feel that we're certainly in a good position to take advantage of the rebound. So what are we focused on? We are focused on our growth and to continue to grow and become a sustainable organization. And we need to execute in 4 areas. So this is somewhat of a busy slide, so I encourage you to look at our annual report, which describes our plans in a little bit more detail. One of the areas is that we're going to certainly continue to market penetration in the United States. The United States is our primary market at this point in time. The increased capacity that we have in our existing facility, as well as with the expansion, enables us to service our existing customers as well as new customers with additional product. Geographic expansion. The need for tissue products is global. We've already talked about Orthopure Xt, where the initial focus is the European market with these ACL grafts. But with our additional capacity, we can move beyond just the U.S. market. Currently, we service about 7 markets outside the United States, and we certainly plan to expand that. We also need to focus on continue to focus on our strategic partnerships, which have been a big contributor to our growth. Our strategic partners, as well as our strong distribution partners, are anticipated to come back online, post-COVID. As David mentioned, we have some top-tier partners, Arthrex certainly being one of them, as well as with the other soft tissue product that we introduced in 2020. Now, we will continue to cultivate our relationships with those organizations. But interestingly, it's also our mid-tier partners, which we expect to grow. As we've helped them grow by providing some innovative products, they become merger and acquisition targets. So when that happens, as they grow, we also have the opportunity to grow. And the last area that we are focused on is strengthening our portfolio. And certainly that means adding additional products, to the portfolio, but it also means something else. It also means developing the clinical evidence that helps, again, strengthen the value of our products. Now, why is that important? Clinical data is used to influence market adoptions. Clinicians are going to use a product that they read about and see, that they hear that works well in the clinical setting. This also attracts additional additional partners. People want to get access to these great performing products. And the other thing is clinical data can be used for us to continue to enjoy premium pricing. So this way we can be reimbursed at the highest levels possible for our products. So, David?
So all of these relate to our, core strategic priority to break even, to become sustainable. Our management team and our board are laser focused on becoming a sustainable business with our existing funding. How are we going to get there? No rocket science here in our business. Sell more, spend less. But let's talk a little bit more about that. First is revenue. As Danny mentioned, we're very close to completing the phase 1 expansion. That will give us a $30 million capacity within our existing footprint. And our sales group is continually working on bringing in new accounts, both the white label customers as well as our core mid-tier partners. As we emerge from the pandemic, we're excited about the future, given this backlog of elective surgeries that we've seen and shared with you recently. With respect to cost of goods sold, given my background in operations, this is an area of keen focus for me. The group has made significant progress here, and we aim to continue those efforts. We talked a little bit about spending in the overhead accounts. We've dramatically reduced that spend as the company kind of transitions from a R&D focused group to a more commercially focused group, right sizing the overhead for a commercial stage entity, reducing in 2020 by 3.1 million pounds. We also announced in January further reductions in our overheads that will cut our spending approximately $700,000 on an ongoing basis. That doesn't mean we're not going to spend where it makes sense. We need to spend to support, for example, sensible clinical studies that support our average selling price for our key products, or enable us to achieve new clinical indications. So we'll spend where it makes sense, but we'll look at the numbers very sharply, I assure you.
So in summary, hopefully you've seen that we have opportunities to grow and increase the sustainable value, of our organization. As David has already mentioned, certainly we have a close eye on overheads, on cost of goods, for supply. We're going to continue to provide products at levels dictated by demand with existing as well as new customers. We will cultivate opportunities with our strategic partners or distribution partners, continue that expansion with potentially new partners. But we plan on executing on our revenue growth in the United States as well as outside the United States. So the takeaways are, we're increasing supply, We're increasing sales revenue, which we're all very focused on sustainability, and this all leads to scale. And scale could potentially mean our company continues to look at opportunities to acquire companies or technologies. We potentially could be acquired. So those are really the four main areas of focus for us: supply, sales, sustainability, and then as well as scale. So Tissue Regenix is prepared for the post-COVID rebound, and we certainly look forward to the growth we expect in all the markets in which we currently participate. So at this point, I think we'll be ready to take some questions.
Perfect, Daniel. Mark? Yes, thank you, Daniel. David, thank you very much indeed for the update. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. I'd also like to remind you that your feedback is important to the company. Immediately after this presentation has ended, you will be redirected for the opportunity to provide feedback in order that the company can better understand your views and expectations. Daniel, obviously investors had the ability to pre-submit questions. We received 5 in total. Perhaps we could start the Q&A off with these questions, and then I will ask you to address those that have come in during the live event. The first question reads, what will the company be doing to regain shareholder value for those who held at the time of the disappointingly priced 50% discounted placing, which saw the share price crash to this value?
Sure. Thank you, Mark, and thank you to the individual who submitted the question. Certainly, what you've heard today is that there is a new executive team as well as a new board that is very focused on some clear strategies to drive revenue as well as profitability, which in turn will drive shareholder value. Hopefully, you got a feeling for that during the presentation. But we're very focused on these fundamentals that on the commercialization. Again, supply, sales, sustainability, and scale. That drives the management team here in San Antonio, the individuals in the UK as well as Germany, and then of course with our board members.
Thank you. Perhaps this next one again for you, Daniel. What are the expansion plans for the UK and European market, and what is the expansion timeframe now that CE mark was secured?
Sure. Again, thank you to the submitter of that question. So certainly with the CE mark, securing the CE mark for the Orthopure Xt product, we did introduce that product into 3 markets in late 2020, and obviously some of these markets are still hampered by COVID. We've introduced the Orthopure Xt product into the UK, Portugal, as well as Poland, and we continue once some of those markets come out of lockdown. We expect certainly some expansion of and increased demand for those products. But at the same time, we're continuing to look for other distribution outlets for the Orthopure Xt product with other distributors in the European Union. This product is again approved for ACL indications, multi-ligament revision ACL procedures, which potentially represents about 50,000 procedures in the EU. We've also talked about expanding our distribution strategy with our allograft tissue products, and that is a project. Right now, we currently distribute into 7 markets outside the United States, and we will continue, and we have plans and activities, ongoing activities, to look at what other European markets we can bring allograft tissue from that's produced in the United States into those markets in the European Union.
Thanks ever so much. Three final pre-submitted questions. The first of which is, are there any plans to list on Nasdaq over the next couple of years? Main market in the US, yet US investors cannot really buy TRX shares.
Sure, that's a great question. Something that we as a management team and board have looked at those options, and it's on our radar screen. It's not something that we're going to pursue in the near term. It's quite expensive, and really our efforts now are focusing on sustainability, and so it's on our radar screen, but it is not a near term focus for the company.
Thank you. The next question, I've read a lot of chat about consolidation since the last share issue. Are there any plans to consolidate?
Again, another great question. That was one of the first thoughts that crossed my mind when I joined the group. In the board, we have reviewed and considered those options, and it is something that is on the radar screen, but it is, again, not a near-term priority for the group.
Thank you. And the final question, and forgive me, it's a bit longer than the others. Following the placing in June 2020 and during the last investor meeting in September, the company conveyed to the shareholders that 13.8 million raised net proceeds should see it through to break even. Any changes to this projection due to COVID-19 or other factors? And as a follow-up, under the current cash burn rate, can you give an estimate of remaining cash runway for the company with phase 2 expansion pace to match the revenue recovery from COVID?
Sure. Hopefully through this presentation, you've gotten a sense of our commitment to become a sustainable business with the funding that is currently on the balance sheet. So hopefully that's become clear in the last half hour or so. With respect to the timing of the phase 2, I just want to emphasize the flexibility that we have in making that decision. We've got a nice level of inventory to support our sales. We've got a facility here that will be done in the very near term that can support $30 million in revenue. So the timing of that is something that we have the luxury of flexibility given the existing capacity we have in this facility and our level of stock on hand. So we have significant flexibility in the timing there.
Thank you very much indeed. And of course, that now concludes the pre-submitted questions. So if I can ask you guys just to take a look at those questions that have been submitted by investors, there are a few in that chat box. Could I ask you perhaps to read out the questions where it's appropriate to do so, and also who they're from, and then I'll pick up from the end.
Very good. Thanks, Mark. So the first question I see here is from Mark W. Nest cash seems very comfortable. Why not press ahead with the phase 2 capex if the demand outlook seems very favorable?
I think we kind of addressed that just a moment ago. I mean, we've got the flexibility. We're not going to spend the money before we need to. We want to see the book of business before we commit to capital expenditures, but we've got the flexibility with our capacity, with our stock levels to make that decision when we want.
Yeah, David and I come from the same, kind of the same mindset where if you build a house, you want to fill the room. So once we have obviously the phase 1, and we are at a point where we know that we're going to reach the capacity with maybe in the next year, we will certainly be starting on that phase 2. Okay. All right. The question here is 1 year nearly on from the successful launch of the question comes from Rags N. 1 year nearly on from the successful launch of a new white label product with a top 10 global healthcare company last year. Can the company advise us on the feedback on its product? Also, is the company now in a position to estimate how big or small the order book for this product will be, any future date when first revenues from this product line can be reported to the market. And cheers. Thank you. Thank you, Rags. And so, as I mentioned, this product was introduced during COVID. The procedures in which this product is used were severely affected by COVID. It was an elective surgical procedure. As I mentioned, the feedback on this product has been quite positive. And again, as surgery schedules resume, people start having these elective procedures, we expect to see that product continue to grow. Again, our partner is very excited with the product, and we certainly expect single-digit that product to for Tissue REGENIX to enjoy single-digit million sales over the next 3 to 5 years. Okay. A question from Mark H. In which geographic markets do you see the most activity in the near term? Well, certainly the United States, but we, with the Orthopure Xt product, again, Germany, Poland, Portugal, and some of our existing OUS outside the United States markets in Europe, as well as South America, as well as Asia. But really, it's going to be hard to tell because, again, we know the certain markets are coming out of COVID. Germany and Poland are, which are of course, two markets that we look at, are going on lockdown. We currently don't have any products in India, but we obviously we all see the news. We see what's going on there. So we have certain targets, but to say where we'll have the most activity, it's going to be a little hard just because we're still affected by COVID. Okay, the next another question is on phase 2. From Roger F. Can phase 2 be for a smaller number of rooms than 10? For example, could we see a phase 2 of say 5 rooms? That's a great question, Roger. The thing is that it's the actual building of the rooms is probably the cheapest part of doing this. It's when you build a clean room, you have all these. You also have to have all these support functions. You have to have a room for sterile processing. And what does that mean? That's for all the equipment and things that we use in the clean room. They have to be sterilized. So we have to have that infrastructure in place. We have to have gowning rooms. We have to have, so when we looked at the advantages or disadvantages of building 5 versus 10, just building 5 rooms would mean that it's almost 2/3 to almost 3/4 of the budget for 10 clean rooms. So
I want to say, Roger F., I've asked Andy the same questions. That was one of the first questions I asked. So,
okay. Another question from, and I apologize for pronunciations of names, Himal S. Sales are broadly flat on 2019 numbers, which is a great achievement given the global COVID pandemic. How have sales fared for the 2 new products launched, Orthopure and top 10 global healthcare company? Can we expect any new product launches to come in the year ahead? I think I answered the first 2 already, that the sales projections, we're a little short, but again, it was expected, for the 2 new products because of COVID. But again, as we come out of the pandemic, I expect those numbers to come back to what we projected. And then, can we expect any new product launches to come in the year ahead? Yes, we have plans to bring online at least 2 new product line extensions, as well as 2 new products through 2021. Okay. The next, another question from Roger F. In the annual report, you say the osteoinductive testing of our BioRinse portfolio, the first products processed from phase 1 of the expansion area expected to be available during Q3 2021. Just to confirm that in Q2, the only benefit of phase 1 will be the distribution center. Is this delay greater than you had forecast? Do you see such delays, and when do you do phase 2? Okay, so we're not going to talk about the phase 2, but with respect to Roger, thank you for the question. The first products, yes, will be that are the phase 1 are, we expect the phase 1 expansion plans to be all completed during this quarter. So we've already built the freezer area for our donors. We have the distribution area, and we moved into both of those facilities. I think we made an announcement in March. So we are in that building and we are in those facilities. Right now, we're just awaiting completion of the 2 new clean rooms, which will be finished this quarter and will be and when I make finish, it also means we'll be operating out of those 2 new clean rooms during the first half. So they will have a revenue contribution to the organization in the second half of 2021. Did I answer everything in that?
Yeah.
Okay, great. Okay, the next question is from Steve Y. And can you give more detail of the 19 Dermapure case studies? How many products are involved and what are their targets? Thank you, Steve, for that question. Now, the 19 Dermapure case studies are all focused on the Dermapure human dermal products. As you can imagine, it's a product that has a lot of can have a lot of clinical indications. So these case studies have focused on its use externally as well as internally. There recently was an article published in the journal Wounds by one of our clinicians, Dr. Bibbo, here in the United States, where he used Dermapure in a COVID patient who experienced obviously a tremendous loss.
Syndrome?
Yeah, compartment syndrome, and was losing the tissue in his extremities. And so I encourage all of you to say, well, I encourage those of you who don't mind seeing some very graphic clinical images, because it really is a testimony to the power of this product and what it can do. But to go back to your question, the case studies run the gamut of foot and ankle procedures, internal procedures such as Achilles tendon repair, rotator cuff repair. They also address wound care. So these case studies cover the use of Dermapure in a lot of different surgical indications. The next question from Jonathan H. Are there other porcine tissue products in the pipeline? Obviously, the D-Cell technology platform is powerful in that with its 99% DNA removal. That's how that technology can take a porcine tissue like is what is used in the Orthopure Xt, which if it's not treated correctly, what would that porcine tissue do if you tried to implant it? It would be rejected by the human recipient. And with the DNA removal through the D-Cell process, it renders that tissue compatible. And as a result, once it's implanted into a patient, it does not elicit the immune response that you would normally get. Currently, we're focused on the Orthopure Xt as well as potential line extensions for that indication. I'm sorry, indication expansion. As I mentioned, it's multi-ligament revision and primary ACLs where the autograft, which is the patient's own tissue, is unacceptable. Certainly, we will look at getting additional indications for that product. But other porcine tissue products, we have developed a porcine dermis product, but right now the development really is on hold until we again assess market demand coming out of COVID. Let's see. Next question from Quentin B. What sort of a threat do you think synthetic collagen scaffolds pose to tissue Regenics? I can't really answer that question because I'd have to know a little bit more about synthetic collagen scaffolds. There have been collagen scaffolds. Collagen scaffolds have existed for a long time. Some of them are, hemostatic type products. And so a hemostatic product is one that is just used to, soak up blood. So they really don't have maybe any mechanical properties. So it really depends on how you are trying to use the collagen scaffold. So I appreciate the question, but I can't really fully answer that because it really does depend on how you use that collagen scaffold. Another question from Peter V. As the U.S. economy, As the U.S. economy starts to return to normal, how have sales responded so far, and what is your anticipated total sales for 2021? I'll answer the first part, David. I'll let you finish. But we're starting to see in certain regions of the United States where our orders are picking up. So it's indicative that those regions are coming out of COVID. Elective surgeries are being rescheduled. So we're starting to see an increase in that activity. Are we back to normal? No. But are we seeing a pickup in activity over what we've seen over the last, certainly 9-10 months? Yes.
With respect to the anticipated total sales, as a listed company, we can't provide that kind of guidance we're restrained by forward-looking statements. But I would call you to there is analysts covering the company, and you can research their work. I think some of them are listed on our website that should have some forecast for anticipated revenue coming out of COVID. But I mirror Danny's optimism about the future in 2021 coming out of the pandemic.
A question from William D. Can you talk us through any signs of an increase in elective surgical procedures? I believe my answer would be the same as what I just mentioned in terms of we're seeing a pickup in the orders that we're receiving. And these are through our distributors, through our indirect distributors. When it comes to our kind of our strategic partners or distribution partners, some have increased their orders, some have not, because some of them are working through a little bit of inventory that they also are building up. But I will tell you that across as we talk to them, and certainly you'll see as we look at news across the industry, people are expecting the second half to be certainly demand to be significantly increased in the second half of 2021. Another question is from Steve Y. Have you considered linking our products with stem cell developers? That's a very interesting question. From if I put on my technical hat, Obviously, when we talk about regenerative medicine, we talk about tissue engineering. We talk about using scaffolds, growth factors, as well as cells. That's the triangle that we are looking at for tissue engineering. So from that point, certainly it's something that we continue to review. There's a number of challenges, of course, when we look at cellular based therapies, not only from a development perspective, but from also a regulatory perspective. But it is, of course, something that we look at. We know that our scaffolds, because because of our processing, we retain the scaffold. We retained a lot of the inherent biologic properties that's in the tissue, and when it is implanted, we see how well the tissue takes, as well as how well the tissue integrates. So we certainly think our products are cell-friendly. So.
Daniel, I think it might be a good time for me to jump in, because every question you answered, there seemed to be another one. So it's a natural pause, and we are coming up to the hour as well. So thank you for being so generous with your time. And thank you to those investors that submitted questions. And for any that we haven't got round to, obviously we'll make available to the company to review post this meeting. As I said earlier, feedback is important, and I know we'll shortly be directing investors to provide you with their thoughts and expectations, but perhaps I could ask you for a few closing comments, Daniel, and then I will look to end the session.
Again, I thank everyone for listening, thank everyone for their questions, but I think hopefully you'll leave this session with the same feeling that we have. We are an organization that's poised for tremendous growth.
Yeah, I'd like to echo what Danny said. It was a great opportunity for us to interact with our individual investors, on a one-on-one basis, and tell you the story of tissue. And thank you for your support, and we look forward to a great 2021.
David, Daniel, thank you once again very much indeed for updating investors. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide feedback. If you access this meeting from our website, then the feedback page will appear. But if you access this meeting via the link sent you by email, you'll simply be asked to log back in to submit your feedback. But it would be greatly appreciated if you could allocate a little bit of time to do so. Hopefully I'll get the company name right this time. So on behalf of the company management team of Tissue REGENIX Group PLC, I'd like to thank you very much for attending today's session. That now concludes the presentation. Thank you once again for your time, and good evening to you all.